Welcome to Power Charting. I am your host, Bruce Fraser. Today, lessons from the master, Richard D. Wyckoff. We're going to hear his very words, his wisdom, and look at a mystery case study. And we're also going to do an industry group scanning workshop with our special guest host, Johni Scan. John, thanks for being here.
Great. We're going to scan with some lessons from the master.
Oh,
very exciting.
Can't wait. So here is, you can read this in your spare time. We're in a hurry. We're going to keep going. And first thing I want to do, just one chart from the current market, and that is to talk about and look at sentiment using put call ratios. Our dear friend, I got to find this so I can put my my little thing up here, is our friend Tom Boley just did a really nice piece on put call ratios. And the only thing I want to add to that, you can read his really fine comments on this, is a 10-day moving average. You know this chart, we've looked at it many times, is that you can see, and let's just go over here and look at another time period. We're going to go right over here. You can see how there's these quick swings up and down, back and forth. This is indicative of a trading range. And you can see that, look at this trading range right here with these swings from pessimism to optimism and back again very quickly. I believe that these trading ranges are the function of the psychology of speculators turning very quickly. We're seeing that happen over here. So you can see here extreme pessimism, a lot of put buying, stops the decline, and then immediately it starts to go down towards bullish speculation, then back to bearish, back to bullish very quickly. Well, look at this mid-August decline has immediately snapped back the put buying to a very high level. And so we're right back at a very high period of pessimism here. I think this represents a trading range for now, at least into the end of the quarter. What are your thoughts, John?
Simple and elegant. Contrary, though.
Contrary. Well, you know, when you get everybody leaning to one side of the boat or the other, you just want to be on the other side of the boat. So anyway, turning to Richard D. Wyckoff, he wrote this great book, out of print, Wall Street Ventures and Adventures Through 40 Years, published in 1930, shortly before his passing. And today what we're going to do is we're going to listen to his words about his experiences from being a young man in 1909, which he was in his early 20s. And we're going to understand what the motives of the composite operator are using a mystery stock. This mystery stock is from a full 100 years later than this first lesson that he learned, which we're going to read about now. And so we are going to use this lesson from 100 years later, which tells us that there's nothing new under the sun in the way that the markets function. Yes, some of the rules change, but the basic principles of best practices of accumulation and campaigning and distribution are all the same and true today as they were back at the turn of the 20th century. So let's hear Mr. Wyckoff's words and then apply them to this mystery case study that we have. This is about E.H. Harriman, who was a great market speculator, a composite operator from the turn of the 20th century. He used Union Pacific Railroad as his chief tool for doing these composite operations, but he also had a very notable partner in his pool operations, and that was Rockefeller. So very important, very big operators of their era, and they were working together. So the manipulation of leading stocks, writes Richard D. Wyckoff, chiefly of Union Pacific, their market leader bore the Harriman imprint, and was clearly defined and easy to interpret if one understood manipulation at all. In other words, easy to see on the charts if you know what you're looking for. That's what Richard D. Wyckoff called tape reading. All one had to do was to be able to detect evidence of accumulation when a bullish operation was being prepared. Accumulation is the preparation of a bullish operation. When the stock reached what I call the jumping off place and was ready for its upward swing, then was the time not only to go with it, but to pyramid. And that is really a cornerstone of the entire philosophy of Richard D. Wyckoff, was to let the CO build the bullish accumulation campaign and then jump on board when it's ready to turn into an important new fresh uptrend. That is so much a cornerstone of the Richard D. Wyckoff methodology. Harriman's method in such a campaign was first to poke a stock down to as low a level as he thought advisable, the blue arrow, then gather in everything he could find within a certain buying zone. There would be drives for the purpose of shaking out weak holders who had placed stops or who could be scared off by signs of weakness. So the composite operator is always trying to build their position in the bottom half of an accumulation area and average cost roughly the midpoint of the accumulation area for their entire holdings. And so you can see here the signs of the shaking out that took place, where the bearish drives to and through the selling climax low, which occurred in this case 3 additional times. After this, Harriman would keep his stock dead within a range of a few points for weeks at a time, so that nobody could make any money trading in it, and those who held it would be discouraged, throw it out, and get into more active issues. This is what I referred to here as the dead zone. Look at the volatility coming out of this chart.
Playing from Win 10 Bronze.
It's being squeezed out into what is occurring, which is absorption. It's accumulation of shares from weak hands to strong hands. In other words, he first shook them out, then he tired them out. And there are the labels for this accumulation structure. Again, 100 years later than the lesson that Mr. Wyckoff is teaching us here. One, knowing how to interpret these movements, which were there for everybody to read, but were understood by few, would observe that thus that the transactions tapered off to almost nothing just before a real move began. That was because there was no more stock for sale at that level. It had all been absorbed by strong hands. No use in putting it further down now. Everybody was shaken out, and a new weakness might bring in fresh and unwelcome buyers. No advantage either in putting it up until the last 500 shares had been gathered in. These were the lessons that Richard D. Wyckoff learned as a young man, because he really wanted to understand what drove the large interests to build a position in a stock and how he could see it on the charts. And so now everybody was shaken out. That's the moment at which the pivot up into a new uptrend can occur. So, and here again, this is a case study. Our mystery stock is from 100 years later. What is our mystery stock? Well, let's have a look. Oh my gosh, it's Apple from 2008, 2009. This is a stock at that time that we evaluated in the classroom. We looked at it every week through the spring semester of 2009. And I was also at that time building a position for a campaign personally to follow the composite operator up with this stock into a new uptrend, which we all talked about in the classroom. And I want to make a very special point here that at the moment of the spring low here in January of 2009 was also the moment at which the uptrend in the relative strength began. This was a tool that Mr. Wyckoff used, had to do in a more fundamental way, comparative analysis that we can do with relative strength. But look at how, even though the accumulation wasn't complete yet, that Apple all of a sudden was going into its own important uptrend of relative strength, which shows renewed leadership. So, and you can see here the rising trend, which followed the price of Apple upward. What did Apple do after this point in time? You can see here that Apple built that base in the yellow shaded box area. The relative strength is in a long-term uptrend. And look at that run from 2009 into 2012. And of course, we know that Apple went on to go much higher after that. So John, that's my lesson for today on the words of and wisdom of the master, Richard D. Wyckoff.
Fantastic. We're going to use some of that thinking to create a very simple scan that anyone can try on their own. Looking forward to that.
Fantastic. Well, let's get to it. I will only add here that you can see an analysis of this accumulation area in a 2015 blog post that I wrote, Wyckoff Power Charting, Let's Review. Go to the archives. You can see this chart all marked up with the phase analysis, which is very, very important. Also in that same article is the accumulation schematics. And I would take those words that were there, only 3 paragraphs, and I would study them over and over again, which I've done, and compare them to the different periods on the 2 accumulation schematics. It's a remarkably valuable lesson, very valuable thing to do. And also do the same thing with the reaccumulation structure, which also you can read about and see that schematic there. And with that, I will pause and we will turn the screen over to Johni Scan. A big part of finding accumulation structures is being able to organize our search through the markets. There are many more stocks today than there were in 1909 or 1930. And we have Johni Scan here to help us to identify best themes, best industry groups, best stocks in best groups. And with that, Johni Scan has created a scan for us today, which is really powerful. John, take it away. Show us what you got.
Thank you, Professor. Let's take a look at searching through industry groups, and let's keep in mind some of the words of the master and basically a concept that he's expressing both explicitly and implicitly. When absorption has occurred, when large interests have accumulated their positions, price exists often at a higher level. They've absorbed, people see that, the other chart readers out there, and we have acceptance of price at a higher level. So if we use that basic concept and craft a scan in our industry group area, what do we get? So here, we're going to make this list public. This list will be the 104 industry groups that I follow and have in a favorites list. But let's simply rank those. Let's not exclude any of them. Let's just rank them by the difference between the current close and a 63 period, which is a quarter of trading, the high over 63 periods. So the highest high over 63 periods versus the close. Let's take a look at what that does for us. We have 104 candidates, that's the number on the list, and they're ordered and numbered. So we see energy equipment, that's been a huge player. Look at the scooter on that. You can't get any higher than that. Conventional electricity, multi-utilities, waste and disposal, restaurant, bars, property casualty, heavy construction. There's a variety of themes operating near the top. Let's take a look at what these charts are telling us. So here's renewable energy equipment. This is not a chart that expresses volume, so a couple gaps, but very interesting bars powering up off a small structure here, part of a larger structure. Yet to see what that's actually going to do long term, but we're just starting to pull up on our relative strength, which is the pink line versus the blue moving average. And that's gaining strength. It's been a significant outperformer lately, and it's having a great week, 7.3% up already this week. This is a weekly chart. And we have conventional electricity. Isn't it interesting that we have electricity and renewable energy right at the top, followed closely by multi-utilities? And then we go into waste disposal, restaurant, bar, property casualty, heavy construction. Isn't that an eclectic mix of industry groups, Professor? What do you make of that?
Well, what's very important about this is that we're seeing the leadership. In my experience in my nearly 40 years, I guess I'm going to have to write a book when I get to 40 years, is the thing that you'll see with industry groups is that there should be a rhyme and a reason, but oftentimes the groups will do very mysterious things. A group that you don't expect will be a leader. And so that's the reason for doing these kinds of scans, because we want to be able to identify all the potential leadership and look for best accumulation structures. And what I really like about your scan here, John, is that you're doing it contextually in a period where the market itself has been weak. So we're seeing best up ideas in a weak market. These are ideas that look like they want to lead the market up and out if this trading range that we're in turns into a new uptrend, say sometime in the next month or two, potentially.
Exactly. And to keep in mind here, this scan is one line, very simple. It's a secondary scan because it's scanning an existing list. That's a very powerful feature in the StockCharts engine. And notice it doesn't exclude anything. It simply orders the list so that we have the information presented in the order that we want it. And it's not really excluding anything based on underperformance or things of that nature, because the high is the high, whatever it is, and the high could be lower than the prior quarter high. We're not asking for any of that. We're just saying right now, tell us what's near its quarterly high. So that gives us these industry groups. And what's interesting is that we have a variation of scooter values. Here's one, defense 77 scooter, not that strong, a couple 75, 78, but the ones at the very top, 99, 96, 95, 97. So this gives you a chance to see some of the things that are emerging and haven't spent enough time up at the top to get that really high scooter rank. But let's take a look at our heavy construction chart. We're going to do a little bit of a deep dive there.
Now, let me make a point too, which is that it's not about finding necessarily the strongest groups. It's about finding the groups that are emerging into uptrends. Think about Apple Computer. Apple turned into a relative strength uptrend while it was still in its accumulation structure. It hadn't started its uptrend yet. Relative strength, we want to see the early evidence of leadership and then drill into the groups and find the best leadership stocks in the group, because we know logically that there has to be one or two leading names that are pulling the whole group. up and out into a new uptrend. And so it's not about finding the biggest uptrends necessarily, or the highest relative strength ratings, even though those are good, but it's also about finding the ones that are emerging into new leadership. That's really important. Carry on, John. I just wanted to make that point.
Absolutely. Great point, Professor. Here we have heavy construction, and certainly theoretically on the eve of a recession, war in Europe, blah, blah, blah. And heavy construction is showing some levels of outperformance. We have a nice uptrend on a relative strength. We are at a new area of a high here. It looks like it's a possible reaccumulation. Our moving averages are in the right order. Our balance of volume is setting up. A lot of positive things there. So how would we drill down into an industry group if we found that to be of interest? Well, we can use the exact same approach, simply defining our universe of scannable stocks as the group, which is part of the drop-down list, chart list feature in StockCharts. You identify the group, and then let's also ask for stocks that are at or near their 63 period highs. So we're just looking for the difference between the close and the high. Keep in mind, the close is always less than the high. You can't, it could be theoretically equal, and there is some logic for using an offset of, 1 day ago max high, but we're just running it straight through this time because most times it won't overlap. Very, very rare would have a close at the dead high. You get that anyways. So here we have stocks from that group, and we see tremendous weekly performance. Look at that upswing on relative strength. Balance of volume still yet to adopt its proper order on the moving averages, but very interesting chart there. Not the strongest chart. Here is Amoresco. This, Professor, you were telling me some interesting tidbits on this stock. What are your thoughts here?
Well, again, it looks like it's in some kind of an accumulation type structure that started in early 2022, and the relative strength has been going sideways and just now is committed to climbing above its long-term moving average, which is the 39-week moving average, and is trying to assert into an early leadership position. And note the very sharp jump off the lows that occurred in June, and a very shallow backup that's both brief and shallow. And now we're in a week where it's starting to reassert itself upward. So these are all characteristics that could show us that we're in the very late stages of some kind of accumulation.
Absolutely. And look at the performance on the week, 14.39% on the week so far. So very, very interesting performance there. Another stock that really is in a very, very solid uptrend, hanging near the highs right now. That's what we're looking for. Look at the slope on these lines that we have, the moving averages, as well as the relative strength. Very, very interesting case there. And this, in the context of a down market, this is moving against the market to the upside. So be interesting to find out what's going on with that in the heavy construction area, maybe energy related power. Maybe they do windmills or something. I don't know. But this is one that
about 2 minutes left.
Great. This is one that I own myself. I picked up here in the retracement area, lower volume comparatively, still a little bit high, but this is showing potential to move up into the prior highs. Relative strength is pretty decent here, and it's taken off recently. So that's one that we are keeping an eye on. I have a pilot position there. So next is from the bottom, middle of the list. When you go down the list on that type of sort, the weaker issues are at the bottom of the list. And that's the ones that are most far below their daily high, their 63 period high. And we see in the context of Jacobs that it's near the area of support in the 113 to 117 area, and modest uptrend in the relative strength, a little bit of rollover on the balance of volume, which is not atypical in a reaccumulation area, but a little bit earlier in its structural phase. What are your thoughts here, Professor?
Could be in a reaccumulation. It had good leadership off of the 2020 lows for a while. Now it's been range bound a long time, which could be cause building. It's in a very good group. It's a laggard in a good group, but sometimes the laggards can come to life. And so we will watch it down here at the area of the support that it's in currently, and we really want to see the relative strength start to come to life and show that it can become a leader on a relative strength basis. That's what the institutions need to see to start to jump in and own it.
So here's a technique that you can use to identify outperformance in an industry group and then drill down within that industry group using the exact same syntax in order to find your candidates. What do you think of that, Professor?
Fantastic presentation, really good, powerful tools, very simple, easy to apply. And thank you so much for this today. And thank you all for being here, and we'll see you next time. Thank you, John.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.